Okay, let's jump right into this. Welcome to today's Explainer, where we're cutting through all the noise to look at a really massive, high-conviction theme from our source material. We're talking about 10 specific stocks positioned right at the epicenter of multi-trillion-dollar tech shifts. Companies with serious potential for massive compounding by 2030. Think exploding demand in AI, data centers, automation, and the foundational energy grid required to actually power the whole shebang. Now, right out of the gate, let's be totally clear. This explainer is strictly an educational analysis of the source text. It's not financial advice, so definitely do your own research. But if you're a patient learner looking to understand the mechanics behind these major future growth drivers, you are definitely in the right place. To really get these companies, we first have to grasp the concept of a megatrend. You know, a megatrend isn't just some passing fad or a flash in the pan. It's a massive, structural shift in technology or society, like AI or quantum computing, that literally redefines the global economy. The source material emphasizes that we're analyzing businesses firmly planted at the epicenter of these shifts. So we aren't talking about speculative penny stocks here. These are businesses with strong competitive moats, accelerating revenues, and very clear paths to massive scaling because they're solving the real, hard problems of tomorrow.
Here's our roadmap for the countdown. We're grouping our top 10 list into 4 distinct themes: powering the revolution, building the brains, automating the world, and software and security. Then we'll wrap it all up with a long-term playbook.
Section 1. Powering the revolution. Solving the massive energy bottleneck.
Starting off our countdown, we're actually grouping these stocks by theme rather than a strict numerical order. So let's compare number 10, IREN, with number 7, NextEra Energy. This is great because it perfectly illustrates two completely different risk profiles attacking the exact same megatrend. IREN represents this high-growth, renewable AI cloud infrastructure play. They've essentially pivoted from Bitcoin mining to building vertically integrated renewable-powered data centers, and they just recently secured a multi-year AI cloud deal with Microsoft, valued in the billions. Huge upside, right? But it does carry execution risks and historical crypto volatility. On the flip side, we have NextEra Energy at number 7. This is your defensive, dividend-paying utility stock. As America's largest renewable developer, it offers a much more stable sleep-well-at-night compounding strategy using its massive regulated utility base. So, same megatrend, two wildly different ways to play the energy scarcity narrative.
And just to put the sheer, staggering scale of this upcoming energy demand into perspective, take a look at NextEra Energy's projections, 15 to 30 gigawatts. Now, what does that actually mean? Well, one single gigawatt is enough to power roughly 750,000 homes. And that 15 to 30 number? That's the amount of brand new power generation NextEra expects to add specifically for data centers by 2035. The power demand for AI is absolutely surging right now, which makes low-cost renewable energy a totally critical competitive edge.
Moving right along to Section 2. Building the brains. Hardware and quantum leaps.
Now we're transitioning from power generation over to the actual physical infrastructure and advanced chips that make AI possible. This table breaks down our next 3 stocks: Celestica at number 8, ASML at number 6, and IonQ at number 5. Celestica's core moat is acting as an AI server and data center manufacturer for the big tech giants, and their 2030 catalyst is all about liquid cooling and co-packaged optics. Think of that as the ultra-high-speed plumbing needed for moving AI data. Then there's ASML, sitting on a near monopoly in advanced semiconductor lithography. That's the mind-bendingly complex light-based tech required to print cutting-edge chips. And finally, IonQ is our frontier play. They're pioneering trapped ion technology, basically using individual atoms for quantum computing, aiming for a commercial quantum advantage by the end of the decade.
The source material actually likens ASML's irreplaceable technology to the printing press for the digital age. Literally every leading-edge chip from TSMC, Intel, and Samsung rely on their equipment to exist. Now, to be objective, we do need to acknowledge the risks noted in the text, specifically industry cyclicality and geopolitical tensions, including their exposure to the Chinese market. But if you look long-term, their near monopoly makes them absolutely foundational to the entire AI era.
Let's zoom in on the timeline for IonQ, our number 5 stock. This one is your classic high-risk, high-reward disruptor. Right now, they're at a pre-revenue scale, operating in a highly complex technological frontier. But as we look toward the midterm, they're driving cloud adoption through partnerships with major providers, and their CEO is targeting roughly $1 billion in revenue and profitability by 2030. Look, if quantum computing hits exponential adoption, that classic technology S-curve, this could redefine entire industries, delivering some incredible upside for investors willing to shoulder that early execution risk.
That brings us to Section 3, Automating the World, Physical and Voice AI.
Jumping to number 9 on our list, we find Symbotic. These guys are completely transforming supply chains by bringing end-to-end robotics and AI-powered automation directly into massive warehouses. Their moat is this incredibly seamless integration of software and hardware. In a world where 24/7 next-day shipping is just the baseline expectation, they're directly solving crippling warehouse labor shortages. The source points out that by 2030, warehouse automation could be a multi-hundred-billion-dollar market. Symbotic offers such a massive return on investment for major retailers that their tech is practically impossible to ignore.
Moving over to our number 4 stock, SoundHound AI takes automation straight into the conversational realm. We are rapidly shifting toward a voice-first world in our cars, our smart devices, and even drive-thrus. SoundHound is securing massive backlogs and specialized contracts by delivering conversational and agentic AI. And by agentic, I mean AI that doesn't just talk to you, it actually takes actions on your behalf. So yeah, the AI taking your drive-thru burger order is getting incredibly smart. With analysts pointing to continued 30 to 100% growth phases, SoundHound's specialized tech is a perfect example of how AI scaling translates directly into massive commercial adoption.
Section 4, Software and Security, the Digital Layer Synthesis.
Now, what's really interesting about this slide is the staggering 67 to 85% acceleration in U.S. commercial revenue for Palantir, our number 3 stock. Palantir is all about turning mountains of data into an actionable AI advantage. Their artificial intelligence platforms are seeing just explosive commercial adoption. And this is backed by incredibly high margins on their software and what the industry calls Rule of 40 excellence, meaning their growth rate plus their profit margin comfortably exceeds 40%. They've built this incredibly resilient, bootstrapped culture and a platform moat that makes them a core holding for anyone looking at AI software winners.
As we hit the absolute top of our list, we're comparing a highly specialized security play with a broader strategic approach. Coming in at number 2 is Cloudflare. They represent high-growth AI and edge security infrastructure, which is an absolute necessity as global data transmission just explodes. But our ultimate number 1 recommendation from the source text isn't actually a single stock at all, it's the top pick basket. The number 1 spot goes to the strategy of building a diversified portfolio across all of these structural AI winners. Because relying on just one single layer of the tech stack kind of ignores the massive compounding nature of the entire megatrend. Which leads us perfectly into our final section, the long-term playbook, managing risk and execution.
The source text is very, very clear that these are volatile growth stories. So managing your risk is absolutely paramount. You really need a 5 to 10-year ownership horizon for this stuff. You should be dollar cost averaging into these positions to smooth out that inevitable volatility. You've got to actively monitor the fundamentals too, things like revenue growth, margin expansion, and major customer wins. And crucially, you have to neutrally understand the caveats we've laid out today, whether that's the pre-revenue timeline of quantum computing, the geopolitical exposure of chip manufacturing, or just the execution risks of these early-stage buildouts. Basically, patience balances out the excitement.
So how do you actually evaluate any future growth stock in the AI space based on what we covered in today's explainer? Well, just follow these 3 steps. Step 1, identify the structural bottleneck the company is solving. Is it power, compute, or labor? Step 2, verify the company's moat. Do they have an irreplaceable tech monopoly like ASML or a fully integrated system like Symbotic? And step 3, monitor their scaling and margin expansion to make sure they are actually translating all that growth into real, tangible value.
We're going to leave you with this final thought. The AI and digital transformation wave is still incredibly early. These 10 stocks we broke down today, they are actively out there solving the real hard problems of the future. So ask yourself, as we accelerate toward 2030, which of these bottlenecks, power, hardware, automation, or software, do you think will ultimately define the next decade of technology? Thank you so much for joining us for this explainer. If you found this breakdown valuable, keep researching, stay curious, and keep your focus on those fundamentals. We'll see you in the next one.